Hello everybody, this is Lara with your weekly video for gold for the trading week ending Friday 6th of May 2022. I'm going to take a step back and look at the bigger picture on monthly charts. The first Elliott Wave count expects a trend change occurred on the 8th of March and a new bear market may have begun. Midterm target 1731, cycle degree target 1037, final super cycle degree target 657. If we see a new low below 1759.35, we can have more confidence in this bearish Elliott Wave count. At the monthly chart level, here was the prior all-time high for gold and a huge bear market that lasted 4.25 years. This wave count sees this as wave A within a huge grand super cycle degree fourth wave expanded flat. Expanded flats are really common structures. They are labelled A, B, C, and they subdivide 3, 3, 5. A B wave of an expanded flat moves beyond the start of A and has a normal range of 1 to 1.38 times the length of A. This example, B is 1.17 times the length of A, nicely within that normal range, and expanded flats are common structures. They most commonly occur in a B wave position, but the next most common position for an expanded flat is a fourth wave. Wave A subdivides as a double zigzag, that's a corrective structure. Wave A within a flat correction must subdivide as a correction. Wave B subdivides as a double zigzag as well, W, X and an extended Y wave. W and Y are most commonly close to equality. They are more even in length here within supercycle A, but they don't have to be. In this example, for cycle Y, it's extended in relation to cycle W. For this wave count, all of the subdivisions at all time frames have very few problems. The bullish wave count, however, has quite a few problems. If B is over here, then C should have begun and it should make a new low below the end of A to avoid a truncation and a very, very rare running flat. And the very few running flats I have seen have B that moves only very slightly beyond the start of A. This one is 1.17 times the length of A. It's got a reasonable new high above the start of A. So a running flat here would be very, very unlikely. So extremely unlikely. And so the target has a reasonable probability for this structure. Supercycle C may only subdivide as an impulse or an ending diagonal. When we get to the daily chart level, I'll explain why I think it's most likely an impulse if my degree of labelling here is correct. Supercycle C will be labelled cycle 1, 2, 3, 4, 5. The target is for supercycle C to reach 1.618, the length of supercycle A at 657. This is a common Fibonacci ratio between A and C within an expanded flat. So it's a common ratio within a common structure. So the target, if this is the correct wave count, should have a reasonable probability. At the weekly chart level from this high here, the end of supercycle B, this point here, at the weekly chart level we can see from this high to this low, cycle wave 1 may have subdivided as a leading expanding diagonal. Supercycle C may only subdivide as an impulse or an ending diagonal, and with an ending diagonal all of the subwaves of cycle 1, 2, 3, 4 and 5 may only subdivide as zigzags. And so if cycle 1 is a diagonal, that can eliminate the ending diagonal for supercycle C, leaving the more common impulse. Within an impulse for supercycle C, waves 1, 3 and 5 must subdivide as 5-wave motive structures, and that's what a diagonal is. It's a 5-wave motive structure. And so supercycle C looks most likely to be subdividing as an impulse, with cycle 1 and now 2 complete. Cycle 2 is a very, very deep zigzag, and second waves following leading diagonals in first wave positions are commonly very deep, so this follows a common pattern. If 2 is over there, then 3 should have begun, and it may only subdivide as an impulse. Because 2 is so very deep, the Fibonacci ratio I'm using for 3 is for it to reach 2.618, the length of 1, at 1037. 3 may only subdivide as an impulse. That will be labelled at primary degree 1, 2, 3, 4, 5. And 2 may not move beyond the start of 1, above 2065.89. Let's take a look at the daily chart now. This high here, the end of cycle 2, is this point up here. Within cycle 3, primary 1 may be incomplete. Within that, intermediate 1 and 2 may be complete. Intermediate 2 is an expanded flat, A, B, C. B moves beyond the start of A, and C is quite long in relation to A. This is a normal looking expanded flat. Intermediate 3 may only subdivide as an impulse, and I'm going to label minor wave 1 over at this week's low, and minor 2 beginning as a bounce, a counter trend movement within a new downward trend. And so the base channel will be important next week. Draw it from the start of 1 to the end of 2, place a copy on the end of 1. Lower degree second wave corrections may find resistance or support at the trend at the side of the channel opposite to the trend. In this case, the trend may be down, so minor 2 should find resistance at the upper edge of the channel. Minor 2 may bounce next week as a short, sharp zigzag. If it gets high enough, it may reach the 0.618 Fibonacci ratio of minor wave 1 at 1941.40. Minor 2 may not move beyond the start of 1 above 1996.96. I have the same 3 targets, mid, longer term and very long term. At 1731, intermediate wave 3 would reach 1.618, the length of intermediate wave 1. And then we'll see intermediate 4 and 5 to complete primary 1. A longer term target for cycle 3 is 1037 to reach 2.618, the length of cycle 1. At the monthly chart level, this is the bullish wave count. It has a lower probability. One of the problems at the monthly chart level is the brevity of grand supercycle wave 4. Grand supercycle degree waves should last a lot longer than 4¼ years. They should last decades, and this one is just, it's very, very brief. And the quarterly chart level, it gives this wave count the wrong look, so that's another problem. The subdivisions are all the same though. Here, for this movement, a double zigzag. I've just moved everything up 1 degree. If grand supercycle 4 is over there, then grand supercycle 5 should have begun, and I'll label supercycle 1 within it incomplete, with cycle 1, 2, 3, 4, I should move this over here as a triangle, and then 5 beginning down here. Within supercycle wave 1, cycle 1 is over here, and cycle 2 is labelled as a double flat. ABC, primary W is the first flat in the double. The double is joined by a quick 3 in the opposite direction for X, and then ABC, a second flat correction for Y. This has a low probability because double flats in my research and experience are actually really uncommon. We also have to ignore a little triangle. I think it's in this little piece of movement here at the daily chart level. There is what looks like, I think it actually might be in this little piece of movement. It's either here or here at the end of one of these B waves. There's what looks like a very, very obvious triangle which has to be ignored for this wave count because it would be a second wave position within a C wave, and C wave and second waves do not subdivide with triangles as their sole corrective structure. Let's take a look at this at the weekly chart level. The high for cycle 3 within supercycle 1, this point here. I'm labelling cycle 4 now a regular contracting triangle with primary A, B, C, D, E. The triangle looks not too bad and the trend lines are met. The only, well, 2 problems here. Primary wave A really does look too long in relation to the other waves of the triangle. This looks a bit forced, and one of the triangle subwaves should subdivide as a double zigzag. The best one in my opinion to be seen as a double zigzag is primary wave B, and this looks forced. It's okay for intermediate W. This looks like a zigzag. X is okay, it's brief and shallow, but Y, this movement would fit better as a 5-wave impulse than it does as a zigzag, but it could be either, so we have to consider both possibilities. It just looks a little bit forced. Again, repeatedly problems with this wave count. This is where cycle 4 may have ended as a triangle, so cycle 5 may have begun. It may only subdivide as a 5-wave motive structure at primary degree, most likely an impulse. Primary 1 and 2 may be complete, and if primary 1 is correctly labelled as a 5-wave impulse, then cycle 5 may only be subdividing as an impulse, because if it was going to be an ending diagonal, all of its subwaves, including primary 1, must subdivide as a zigzag. So if this is an impulse, cycle 5 is an impulse. Primary 1 and 2 may be complete. Primary 2 may have moved a bit lower this week. If it continues any lower, it may not move beyond the start of 1, below 1759.35. Targets for primary 3 are recalculated this week. If price reaches the first target and the structure is incomplete, or price just keeps on going up, then attention turns to the second target. At 2347 now, primary 3 would reach 1.618, the length of 1. At 2654, primary 3 would reach 2.618, the length of primary wave 1. At the daily chart level, this high here for primary 1, this point here, here's the lower edge of primary 2, moving a little bit lower this week. If it continues lower, it may not move beyond the start of 1, below 1759.35. If primary 2 moves lower, redraw the base channel from the start of primary 1 to wherever primary 2 may have ended. A copy on the end, it should be on the end of primary wave 1. Okay, classic analysis. Now we're going to look at monthly charts as well this week. At the monthly chart level, it looks like there may be a double top formed, and here we have an evening star candlestick pattern in these 3 monthly candlesticks, and here now we have a shooting star candlestick pattern, 2 bearish candlestick patterns and a possible double top. This is bearish and supports a bearish Elliott wave count. Resistance is holding at 2100. Next support 1675. Volume is pushing price higher, and now it declines as price falls, so not as much support for a bearish case regarding volume as you would want for confidence in that bearish count, but you don't have to see volume pushing price lower, particularly at the start of a trend. On balance, volume has a weak range at the monthly chart level, no signal here. ADX at the monthly chart level is still indicating an upward trend, which is still extreme and has been for a long time. It's a lagging indicator. If there has been a trend change just 2 months ago, ADX is not going to catch up for a year at the monthly chart level. It's based on a 14-month average, so it'll take more than a year for this one to catch up. And we look at lower time frames for that. ATR's flat as price is essentially moving sideways within a consolidation zone. RSI neutral, stochastics neutral. At the weekly chart level, we have at this high here a strong bearish engulfing candlestick pattern. This has a strong push from volume, pushing price lower. And here at this high, we have a shooting star candlestick pattern and what looks like a potential blow-off top. And now price is moving a little bit lower. For the very short term, 2 bullish long lower wicks for the last 2 completed weekly candlesticks support the view that we may be about to see a bounce next week. ADX is declining at the weekly chart level, no clear trend. The last signal from on balance volume was bearish, no new signal this week. Volume is actively pushing price lower week on week. This is bearish and supports the bearish Elliott wave count. RSI neutral, stochastics neutral as well. At the daily chart level, we also have a bearish candlestick pattern here. It doesn't have as much support from volume though, because the prior upward candlestick for this session was a blow-off top. Here another high, another bearish candlestick pattern in a shooting star. Last week I noticed that this morning star was suspicious because the third candlestick pattern lacked support from volume. That suspicion was proved to be correct, and now we've got a little bit more downward movement. So this potential morning star is now negated by this bearish candlestick pattern. These 3 candlesticks look like a pause within an ongoing downward trend. There is no bullish candlestick pattern at this low, so we don't have indication this week of a trend change. So if we get more upward movement, it looks more likely to be a counter trend movement. For recent sessions, it's downward sessions which are strongest, pushing price lower. For the very short term, we get a bullish signal from on-balance volume. This supports the view that we may be about to get a bounce next week. That's another reason why I'm expecting that second wave correction to bounce up higher, and if it reaches it, to find resistance at the upper edge of the base channel. At the daily chart level, ADX is still declining, indicating no clear trend, but it's not going to take much at all for the ADX line to turn up. RSI is neutral, stochastics oversold, no clear trend, stochastics oversold. Let's expect a bounce up from support about 1850. Look out for next resistance at 1960. and ATR declining as price moves sideways. That's all from me with your gold analysis this week. I hope all our members are looking forward to an awesome weekend.